And China is at a crossroads in its economic recovery. With a slowing economy and declining consumer confidence, the government is launching a $41 billion stimulus program to jumpstart domestic spending. Can these new measures reignite growth, or will China's deep-rooted culture of saving continue to hold back its recovery? Let's dive into the challenges and what lies ahead for the world's second-largest economy. Take a look.
China's economy is facing significant hurdles with sluggish growth and declining consumer confidence. In a bid to revive domestic demand, the Chinese government has launched a $41 billion stimulus program, offering discounts on everything from household appliances to electric vehicles. This initiative comes alongside promises of new childcare subsidies, higher wages and better paid leave, aiming to encourage spending. However, while retail sales grew by 4% in the first 2 months of 2025, home prices continue to fall, signaling broader economic difficulties. The real challenge lies in a deflationary environment where prices have been falling for 18 consecutive months, creating a vicious cycle where low consumer spending leads to job cuts and stagnant wages. Deflation, when inflation falls below zero, has gripped China, making it harder for businesses to maintain profits. As prices decline, consumers become more cautious, reducing their purchases. This, combined with rising child-rearing costs, 6.8 times China's GDP per capita, has led to a culture of saving rather than spending. In 2024, Chinese households saved 32% of their disposable income, indicating deep economic caution. The situation is worsened by a property crisis where many households' wealth is tied up in real estate, which has seen significant value drops. As a result, consumers are more risk-averse and reluctant to spend, further stalling economic recovery. Beijing's economic plan for 2025 emphasizes boosting domestic consumption to drive growth, aiming for a 5% increase this year. However, China's consumption has historically accounted for only 50 to 55% of its economic growth, much lower than in major economies like the US and India. Analysts argue that shifting from a savings-driven model to one based on consumption would require a cultural shift, which may be difficult given the existing system that favors saving and investment. As China faces geopolitical challenges and a growing reliance on domestic demand, its leaders must navigate these complex issues to ensure sustainable economic growth. However, some doubt whether a consumer-driven economy is truly Beijing's long-term goal. Business Bureau, WION World is One.
For latest news, download the WION app and subscribe to our YouTube channel.